Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Wednesday, 9th July. Coming up on today's show, we'll have the latest on President Trump's latest tariff threats and the impact they're having on the markets, especially copper prices. We'll also take a closer look at the latest problems facing Apple and tell you about a stock that climbed over 500% yesterday and looks set for more gains today. You'll have to stay tuned for the big reveal. Plus, we'll take another deep dive into AI with the second part of our interview with the president of Cisco, Jeetu Patel. So grab your coffee and let's own the morning. So here are the three things you need to know before that opening bell rings on Wall Street. First, today we're doing copper. That's how President Trump opened his cabinet meeting on Tuesday. He then went on to say he would impose 50% tariffs on the industrial metal. Well, it was no surprise that this sent US copper prices soaring. In fact, copper futures traded in New York increased by 13% to close at an all-time high of $5.69 a pound. It slipped back from that level this morning. Now, remember, copper is used in electronics, construction and industrial equipment. And Chile is by far the biggest supplier of refined copper to the US, around 70% in dollar terms. Now, the Chilean-based copper mining giant Antofagasta, which trades in London and is in the FTSE 100, saw its share price fall sharply at the open, down there just shy of 1.5%. Now, the second thing to be aware of, and again, it was a President Trump pronouncement, a potential 200% tariff threat on pharmaceutical goods. However, he suggested those tariffs would not go into effect immediately, perhaps in a year or 18 months' time. Now, drug companies have warned that the levies would drive up costs, deter investments in the US, and disrupt the supply chain, ultimately putting patients at risk. Meanwhile, Merck has struck a roughly $10 billion deal to buy lung disease-focused biotech Verona Pharma. This is Merck's biggest acquisition in 2 years. And the third thing to know about, again, we're sticking with trade. On a social media post, President Trump said that tariffs will start being paid on August the 1st, saying that date would not change. The market seemed to take him more seriously in Asia. In Hong Kong, for example, the Hang Seng fell by over 1%. He also said that he'll make announcements today on at least 7 more countries. That's after he sent 14 letters out on Monday, which outlined higher tariffs those countries would face from August 1st. A trade deal with India seems close, but still the president threatened to punish the country for its participation in the BRICS forum. A deal with the EU is also on the cards, but again, the president is unhappy at how the bloc taxes and fines big US tech firms and has warned of retaliation. Now, one sector that has warned about tariffs is retail. Both Walmart and Target flagged them when talking about future profits, and there are some estimates out there that suggest that around 70% of goods sold on Amazon are made in China. Now, the e-commerce giant is in the middle of its Prime Day event, but it's facing growing competition, as my colleague Brooke DePalma explains here on Yahoo Finance.
What we've seen in recent years is really Amazon get taken on by their retail rivals. Think Target, think Walmart specifically, but so many others are looking to get on this big splash of savings like Target, Home Depot, Lowe's, Best Buy, even Tractor Supply and Ulta Beauty. Well, they're looking to get in on the action too, but let's take a closer look at one of their biggest competitors, Walmart. Well, Walmart, they're really up their ante when it comes to their e-commerce business. In the last quarter, that e-commerce business here in the US just turned profitable, and now they're really doubling down on their offering this week. They're, instead of just having a 4-day event like Amazon Prime, they're looking to do it bigger. And so Walmart's having a 6-day event from July 8th to July 13th. That's trumping Amazon Prime's day event from July 8th to July 11th. Now, some sources telling me that Amazon is clearly the big winner this week. And sure, customers, just top of mind, they'll go to Amazon first, they'll look at the prices, but then ultimately what they might be doing is going elsewhere in this environment where consumers are so conscientious about how much things cost. They really are conscious about where exactly they want to spend here. And so they'll go elsewhere. They'll go to that Walmart. They'll go to these other retailers. But this could be a prime opportunity for Walmart. That's what some analysts tell me. Specifically, what they really want to gain here is memberships. Walmart Deals Week, they're ultimately enticing those Walmart Plus customers, something that'll launch back in 2020, to sign up. They're saying, hey, through mid-July, we're going to offer 50% off, and that could be a big opportunity for Walmart. But when you really look at another business that Walmart's winning on, that's Walmart grocery business here. Of course, they've been touting that in recent earnings call, that they're gaining more high-income shoppers, and that Walmart Plus membership also tends to be higher income as well. But when you take a look at the numbers, guys, Walmart's e-commerce business is far, far lower than Amazon's business here when it comes to just how much money they're bringing in. If you take a look at last year right here, you can see that Walmart brought in around $121 billion when it comes to their e-commerce business. That's, of course, far lower than Amazon's e-commerce business, online stores. And also, when you think about just how much membership fees they bring in, Amazon also surpasses by a landslide how much Walmart Plus brings in when it comes to membership fees. And also, the top side here is that Walmart Plus subscription is far lower than Amazon Prime. Also, they're offering that half off right now. And so it could entice customers. That's ultimately what Walmart wants here. They want to take the eyes away from Amazon.
Our first ticker today is not only trending, it's positively buzzing. It was up more than 1,000% at one point yesterday. Now, the Nasdaq-listed ProKidney, aka PROC, ended the day at plus 515% on Tuesday. This incredible rise followed the release of positive results from a phase 2 clinical trial, raising hopes that the FDA may accelerate approval of PROC's cutting-edge therapy for patients with chronic kidney disease and diabetes. The data exceeded expectations from both analysts and management. For this reason, Citi raised its price target for PROC to $9 from $6. So they think the value of this stock can still roughly double from here. Now let's move on to the Paris Stock Exchange for our second trending ticker. EssilorLuxottica, the maker of Ray-Ban, Oakley and many of the world's most popular eyewear brands, jumped by as much as 6% this morning. Let's look at our live market data. It's now at €252.80, up around 5.6% there. Investors are reacting to reports that Meta has bought a minority stake in the company as it looks to make new inroads into wearable technology devices, such as the Ray-Ban smart glasses heavily advertised by Mark Zuckerberg. Touting the success of those Ray-Ban smart glasses early this year, the CEO of Luxottica, Francesco Milleri, said they aim to produce as many as 10 million units per year. New AI-powered devices under the brands of Oakley and Prada are also in the works as well. Now, Bloomberg reported that Meta has now acquired shares in Luxottica which are worth around $3.5 billion and is considering further investments. And finally, I think you need to know about Apple. I'd asked my colleagues in the gallery to please show me the stock chart since January. Now, look at this. Apple is down, more than 16% since the start of the year. It's not a dramatic fall, but a gradual, painful struggle for this blue chip stock, which hasn't wowed customers with new products for a while and which is facing challenges from tariffs and global tensions. And now, to make things even more challenging, Apple is going through a major changing of the guard. The company's longtime number 2 COO Jeff Williams is retiring. Apple named Sabih Khan as its new chief operating officer. This is only one of several key staffing changes during this tumultuous time for Apple. Just yesterday, Bloomberg reported that Meta had poached one of Apple's top AI chiefs. Still, there might be some promising news for Apple on the horizon. Now, according to the Financial Times, Apple is in talks to buy the US rights to screen Formula One, which comes off the success of its Formula One film. And while Apple has been a bit of a mixed bag recently, some AI stocks have been absolutely flying. One of them is Jabil. Jabil's executive VP, Matt Crowley, joined Market Domination here on Yahoo Finance. He explained how Jabil is investing into cutting-edge technologies like silicon photonics.
It's kind of incredible when I look at the history of this company, which was making circuit boards in the late 60s and still does, but makes a lot of other things and has grown into a huge company here. A lot of that growth now is coming from AI, which of course is the engine that's driving so much right now. You help oversee the infrastructure business there at Jabil. What has been driving that growth, which was something like 51% last quarter for the company? What's been driving it? What's going to continue to drive it?
Yeah, well, first, thanks for having me on, Julie. I really appreciate it. Absolutely, we've seen a ton of growth from AI. What I would tell you is a lot of that is due to our team. I think we have the best team in the business. We continue to execute exceptionally well for our customers, and that translates. And what it does is it builds trust over time. And in this market, with all of the increased demand that's going through the roof, customers need a supplier that they can trust. So we really feel like we've done a good job of building those relationships. We've executed, and now we're seeing a lot of the success. In addition to that, we've also built capabilities that we didn't previously have. So we've gone and done acquisitions in the transceiver space. We've done acquisitions in the liquid cooling space. We feel really good about how those are going, and we're starting to see those pay off.
And Matt, for those who are not as familiar with Jabil, talk to me about your role in this business. What exactly are you guys doing when you talk about transceivers and liquid cooling? Mm-hmm. Basically, you guys are helping build the racks that are in these data centers, right?
We do much more than that, actually. Mm-hmm. And so, traditionally, we've probably been viewed as a company that puts together a bag of parts, but in actuality, we've expanded our capabilities dramatically. So I mentioned transceivers. We made an investment to bring in silicon photonic capabilities, which is effectively the transmission of data via light. It's got a much lower latency and it requires less power. And so having that core capability will set us up for success and adding much more value over time as things like co-packaged optics become a more standard technology. At the same time, inside of the data center, whereas previously all data centers were cooled with air, they're now being cooled with liquid. So having capabilities, understanding how to move liquid throughout the data center, cool chips with liquid versus air, that's a capability that adds value well beyond putting together and assembling a server. And so we really feel like we've done a good job of bringing on capabilities that add more value for customers, and I think you're seeing that in our results.
As I mentioned, you saw that big growth year over year in this infrastructure business. If my math is right, it's about 40% plus, 44% of overall revenue last quarter. And you guys gave a projection that for the full fiscal year, that revenue will be $8.5 billion, which will be up 50%. You're also putting some money into the manufacturing capacity now as a result of this, a $500 million investment in the southeastern U.S. over the next several years. Is your constraint at this point capacity? In other words, do you have more demand than you're able to keep up with at this stage?
We do have a significant amount of demand. Regardless of that, we would still build incremental capacity because one of the biggest value props of doing business with Jabil in this market is that we are a U.S. domiciled, U.S. manufacturing company. And a number of our competitors with similar capabilities are Taiwanese or Chinese. And so as you think about AI, where it's going, the importance of AI, sovereign cloud, being and having a U.S. manufacturing partner that can help protect the IP that comes along with this technology, as well as the know-how, the process knowledge, it's incredibly important. We feel like the demand is going to just continue to grow. And so, yes, we're definitely pushing up against some capacity in the U.S. Having more capacity, we feel like is going to be something that's going to be taken up pretty quickly.
Well, we're heading for a break now. We'll come back with our interview with the president of Cisco. And now it's time to hear the second part of my interview with Cisco President Jeetu Patel, who gave me his predictions for the future of AI. Now, recently I spoke to the Secretary General of the OECD and I asked him whether AI was here to take away our jobs. What do you say to that question?
I I hear that a lot these days, and my advice over there is I actually personally worry less about AI taking people's jobs, and I worry more about people that use AI well, that can get the job done better than the folks that are doing it taking those jobs. And so in my mind, I think it's very important for people to actually not sit on the sidelines and start experimenting and get dexterous with the use of AI, because I think there's only going to be two kinds of companies in the world. There are going to be companies that are very skilled with the use of AI, and then there are going to be companies that are going to struggle for relevance. And you want to have more and more of the companies in the first category than the second. Hopefully we can help with that. It was interesting. We've done some studies recently with CEOs of companies, and about 97% of the companies, their CEOs are optimistic about the future of AI, but only 1.7% of them feel prepared. So then you ask the question, why that dissonance? And it's three things that come up. Is the infrastructure available and ready so that people can make the most use of AI? That's number one. Number two is this notion of safety and security. Can I trust this system so I feel comfortable using it? For the first time in history, security has become a prerequisite and an accelerant for the adoption of AI. That has not been the case in the past. In the past, you either picked security or you picked productivity. It was one or the other, right? And then the third one is a skills shortage. And so right now, while people think the jobs are going away, right now, there's such a huge demand for people that actually are dexterous with the use of AI to be hired. So in my opinion, jumping in and actually learning about AI is a much better strategy than worrying about whether or not it's going to take your job away.
As a company that cares quite a lot about cybersecurity, as you've mentioned,
Yep.
How can we be secure that these machines won't put our safety at risk, our security at risk, our data at risk?
It's actually a great question. So one of the things to keep in mind is the application architecture on how applications got built over the past 20 years is fundamentally changing, because you used to have an infrastructure layer, a data layer, and a business logic layer. Now you've kind of inserted this new layer called the models. Now, what is interesting about models, and what's the core characteristic of a model? It's non-deterministic, which means it's unpredictable by nature. Sometimes it hallucinates. Hallucination can be a feature in certain aspects. It can be a bug in the other. If you're writing poetry, it's fantastic. If you're actually going out and trying to make sure that you do cybersecurity, it's a really bad thing for hallucination to happen. And so what we have done is provided capabilities to be able to do three things. Figure out what data is flowing into these systems, into these models. And then number two, provide validation for these models, because these models need to get kind of validated on whether or not they're going to behave as predictably as you're expecting them to behave. And so what you want to do is you want to make sure that you determine when this model can be jailbroken. Jailbroken being another word for, is it behaving in ways that are different from what you expect it to behave? And then provide runtime enforcement of guardrails so that any application developer doesn't have to think about building a full cybersecurity stack. You have a common substrate of security across all models, all agents, all applications that are getting built. And that's what we've actually built at Cisco. So we've built this kind of capability to protect the models and secure AI itself. And if we can do this in the right way, there's magic that can start happening, because what you do is you allow people to trust these systems so that they feel comfortable to use them. Today, one of the big deficits in these systems is people just feel nervous using them because they don't know what's going to happen to them. And so that's what we're trying to do, is if you can democratize the use of AI by making them safe and secure, you can start solving problems that we had never imagined solving before. I mean, imagine if you had a different set of original insights that were, derived from AI that could allow you to solve cancer.
Now, do you think this is why investors seem to like what they're hearing from Cisco? I mean, they've seen the stocks up around a fifth in the last 3 months. Is it all down to, your move into, really trying to get into all areas of AI?
I think the thing that people are starting to see is Cisco is the critical infrastructure provider for the AI movement. And if you think about the amount of money over the course of the next few years that's going to be spent on AI. Trillions of dollars will be spent in building out this data center capacity, because the data centers of yesterday just don't work to go out and fulfill the needs of the data centers that are needed for the AI movement. So you're going to need to have a whole new infrastructure that gets built out. And Cisco's technology is central to that infrastructure getting built out, because like we talked about, there are three constraints: power, compute, and network bandwidth, along with a trust deficit that has to actually get bridged. And so the network bandwidth and the trust deficit are two things that we actually work very closely with. And we partner with companies like NVIDIA and AMD and provide the compute servers as well. And so you can start, and then we provide efficiency in our gear for power, so that every kilowatt of power that can be saved in our devices can actually go towards the GPUs, which tend to be power hungry. So all of those things tell you that security is going to be a very, very critical infrastructure provider for the AI era.
So you talked about your partnerships there with AMD and NVIDIA. Have you got any new exclusive partnerships you want to reveal here?
So we've actually got partnerships with OpenAI. We've got partnerships with Anthropic. I mean, there's a continued set of vendors that are out in the market that are continuing to have these partnerships. And I would say that today we are in the second major phase of AI, which is agentic. Very soon we'll also have physical AI, which is the robotics side that'll come up. And you should, I haven't said this anywhere else, but you should stay tuned on what Cisco is going to do in that side as well.
So we've got to keep an eye on robotics.
Keep an eye on robotics, keep an eye on the things that we might be able to do with robotics as these models get more sophisticated to accommodate physical AI.
Extraordinary insights there from Jeetu Patel, the president of Cisco. You'll be able to watch the replay of that interview on finance.yahoo.com. So stay with us. We're about to go into a break, but afterwards we'll be diving into what's moving the markets today. Now let's take a look at what's moving the markets today. Well, that's happening in Europe. The Stoxx Europe 600 Bank Index has risen to its highest level since 2008 this morning, up over 1.5% so far today. 1.64 actually. Now led by the likes of France's Société Générale, Spain's Sabadell and Germany's Deutsche Bank. But this rise should come as no surprise. In fact, European bank stocks completed their strongest first half performance since 1997, up almost 30% this year. Well, an increase in deal making is adding more fuel to the fire. Take German lender Commerzbank. Its multi-year rally has been driven by takeover interest in part. Its share price has more than doubled since UniCredit took a stake back in September and raised the possibility of a full-blown merger. In Spain, despite government reservations, BBVA still has plans to take over its smaller peer, Banco Sabadell. And in Italy, lenders are currently in a deal wave that could reshape the country's finance sector. And in the US too, all eyes are on banks as they prepare to report earnings. Well, thanks for watching Market Sunrise. Again, let's have another look at the markets before we end. And thank you so much for watching another episode of Morning Brief Market Sunrise. I'm Ramzan Karmali. Stay tuned to Yahoo Finance to watch more unbeatable financial information from my colleagues in the US. Have a great rest of your day.